morning, everybody. Welcome to the Amvest Capital webinar with Seabridge Gold. Seabridge trades on the TSX as SEA and as SA on the NYSE. Do hope you enjoy today's program. It'll also be available in on-demand mode about an hour and a half after we wrap up. An important part of our format is you're sending in questions. So if you see something highlighted right now, that's where you can shoot in questions and we'll read them to Rudy in real time. If you're really enjoying yourself, don't keep it to yourself. You can share it here through an email or Twitter or LinkedIn and a few other places, Instagram. You can share this in real time. The link will work for the on-demand replay as well. And you can always get a copy of the on-demand replay at amvestcapital.com/webinars. At the end of the show, you can share your feedback, either here or on your way out or follow-up email. But don't fill it out till the end of the show because you only have one shot of sharing feedback. Very pleased. Amvest Capital, New York-based specialist investment management corporate finance firm focused solely on the natural resource sector. Please note this call is most definitely for informational purposes only. And very pleased to have with us Rudy Frank, the chairman and CEO and co-founder of Seabridge Gold. Welcome, Rudy.
Thank you, Campbell, and thanks for the introduction. Before I begin, I will remind everybody that I will be making forward-looking statements during this presentation.
I was going to just interrupt for a second. Someone had a burning question, and it's so relevant to this whole story. Love your comment on the Kirkland and Agnico merger of equals, and how might that play out and make things different or more interesting for Seabridge?
Well, great question, Campbell. I have the uttermost respect for Sean Boyd, who is the CEO of Agnico Eagle. I've always thought that Agnico Eagle was one of the best run gold companies on the planet, and I think it will continue to do so under his leadership as executive chairman. I think it's no secret that on its own, KSM was probably too large for Agnico Eagle, although it is a Canadian asset. Now with the combination of Kirkland Lake, though, that now makes a much larger company, and they will have the same need as other big companies have, and that's to replace reserves that they mine every year. And the fact is the industry is not doing it internally on their own. They have to go out and buy new projects. So it's nice to have perhaps one new potential partner at the table that would have the financial capability and technical capabilities to take on a project like KSM. I think it's also an indication of how challenging it is in the gold space right now. The elephant in the room that is not really fully appreciated, although Mark Bristow at Barrick has spoken about it often, is that the big companies are not replacing their reserves with their mining. In fact, in my 40 years in the business, I've never seen a shorter life of reserves, what's left to mine relative to what they're producing today, than exists today. So I think that the stars are lining up for us and getting a deal done on KSM as a result of this need for new reserves for big companies that are not replacing what they're mining on their own. So it's always fun to start a presentation with a question. In my view, it's always the Q&A period that is far more interesting, and I think may perhaps elucidating to those that are in attendance. But I will run through a slide deck first and then have plenty of time for Q&A. My presentation today should take maybe 20 minutes, hopefully no more. So we still believe that the future for gold is positive. We speak about this quite regularly. In fact, Jim Anthony, the co-founder of the company, do a lot of these webinars together. He's not able to make it today, so I thought I would just kind of lay out our case for gold in terms of why we believe the price of gold will go much higher over the next period of time. The fact is that the debt is expanding in the U.S. and in the world much faster than the economies are growing. If you look at the debt to GDP in the U.S., it's now at over 130%, which is a record high. There's only been one other time in U.S. history where the debt to GDP has been above 100%, and that was coming out of World War II. And the only way that the government back then was able to get debt down to a more manageable level relative to GDP was by controlling interest rates through bond purchases, basically your yield curve controls. We're seeing money supply growing at unprecedented rates as a result of central banks continuing to monetize debt. Unlike 2008 to 2014, when QE was ring-fenced within the financial system, this time around, this newly printed money is going into the real economy, which in fact is producing inflation that we have not seen for almost a generation. Central banks would like us to believe that inflation is transitory. I don't buy that for a second. I believe that inflation will continue. And as a result of that, we will see not only rising deficits, rising inflation, but also slowing growth. And as a result of that, we are extremely favorable on the gold price in just about every fiat currency out there, and believe that we'll see a significant weakening of the dollar relative to gold and other fiat currencies. So why Seabridge? Well, if you look at, we have a 22-year track record of showing significant outperformance relative to the gold price. The fact is, if the gold price is going to go higher, our share price will do what it's done in the past, and that's show significant outperformance relative to gold and other gold equities. And this is because of what we've been able to do with our capital structure and our ounces in the ground. We provide far more gold ownership per share than any company on the planet. And it's also not just about gold, as I'll touch on briefly in today's presentation. We also have more copper per share in the ground than any of the largest copper companies out there. We also own 100% of the world's largest undeveloped gold and copper project in an environment now where big companies need new projects. Not only is KSM large, but it has successfully gone through the environmental assessment process with permits in hand, and also shows tremendous capital efficiency, which is about to get better as a result of the Snowfield deposit we recently purchased from Pretium. And then last but not least, we've made our name through the drill bit. We have found more gold than any other company on the planet over the past 15 years, including the majors, with far less expenditures. As the gold price dropped in 2015 down to about $1,000 an ounce, we took advantage of that drop down and went out and bought 3 new projects, any one of which we believe can be a company maker in terms of exploration potential going forward. We also try to minimize political risk by focusing only in North America. In my career, I've had mines that I have built expropriated by third world governments. Political risk is very real in our space. Tends not to happen, though, in Canada and the United States, where our projects are situated. This slide, I think, tells the story best in terms of why we've been able to outperform gold and other gold equities. It's been our disciplined approach in trying to grow ounces in the ground faster than shares outstanding. When Jim Anthony and I formed this company in 1999, our goal was to create the best leverage play to a rising gold price by simply providing more gold ownership per share than any other company on the planet. And if you look at where we stood exiting 2020, nobody came close to us in terms of ounces of gold in the ground, either by reserve ounces per share or gold resources per share on a per share basis. In fact, we provide 5 to 50 times more gold ownership per share than any other company on the planet. And what that has translated into is what we were hoping for, significant leverage and optionality to the gold price. Since we started the company, the price of gold is up by about 500%. Our share price is up by over 8,000%. We continually outperform gold and other gold equities when the gold price is going higher. Obviously, leverage works both ways. During those periods of time when we've seen downturns in the gold price, our share price has not performed well, as you would expect based on the optionality embedded with the ounces per share. It's interesting to note on this slide, a lot of the names out there, like Newmont, Barrick, Kinross, they have significantly underperformed the price of gold by a meaningful way over the past 22 years. Investors buy gold stock with the expectation that the price of that stock will go higher if on a relative basis compared to the gold price rising. And in fact, the past 22 years has shown that this is not the case. I will be doing a presentation at the Jim Grant Conference on October 19th in New York City, where Jim has asked me to speak about what I have learned in my 40 years in the business relative to investing in gold mining stocks. And at that presentation, I plan to touch on the reasons why I believe the gold industry does not generally provide the the outperformance you're looking for to the gold price in a rising gold price environment. And it's not just about gold. In addition to gold, we also have found a lot of copper. We recently added this slide to our presentation showing that compared to the other large copper companies out there, in addition to our 2 ounces of gold per common share, we also provide over 600 pounds of copper per common share in all resource categories, which is far more copper per share than any of the companies in our space. And why this is important? We believe that as bullish as we are in gold, we're also bullish in copper as a result of the demand that we're now starting to see create as a result of the green energy initiatives that are being put in place on a global basis. The fact is today the industry produces just about enough copper to satisfy demand. As demand increases as a result of the requirement of more amounts of copper in electric powered vehicles, solar panels, or wind turbines, the demand for copper will go significantly higher. And as a result, the price will go higher because no new mines are getting built either. So in fact, I think Goldman Sachs did a study that between now and 2030, the cumulative deficit in the copper market, including new mines that are supposed to get built, will exceed 30 million metric tons. If that's not a good recipe for higher copper prices, I don't know what is. So turning specifically to KSM, I actually just got back from the project, did a visit to the site last week. First time I was able to get to the site since COVID began. KSM is located in the northwest portion of British Columbia. It's in elephant country known as the Golden Triangle, where we've seen a lot of discoveries over the past 20 years. It's also an area that's now attracting the major mining companies. We have Newmont that recently came in, buying 100% of GT Gold. They also have a joint venture in place that they've had for a few years with Teck at Galore Creek. And we have Newcrest now as an operator of the Red Chris mine. Our next door neighbor at KSM is Pretium, who has successfully built a high-grade underground mine that's generating significant cash flows for their shareholders. One big advantage that we have over other undeveloped projects around the world today is the infrastructure that's been put in place with other people's money. When we bought this project from Placer Dome in the year 2000, there really was no roads, no power, or no ports. Fast forward to today, we now have all three that have been put in place with other people's money, meaning that we do not need to build ports, build power plants, or build highways because they're already there. In fact, along Highway 37, the government has spent over $700 million extending the power grid to bring power to this region. And we've now secured with contractual agreements with BC Hydro 250 megawatts of power from that line that we'll be able to buy off the grid for about 5 cents per kilowatt hour, some of the cheapest power in the world. And also just to the south of us, I just visited last week a brand new port facility that's been built called the World Port that will allow us to bring supplies in and concentrate out on a year-round basis from any location on the Pacific Rim. Access to highways, access to ports, and access to power, cheap power, really does separate KSM from other projects that may be available. At KSM, we are blessed with an amazing amount of metal in the ground. Between the 5 deposits we now own, we have 9.8 billion tons of economic resources that are either confined by open pit shapes or block cave shapes. These 9.8 billion tons contain 140 million ounces of gold and over 50 billion pounds of copper. As we went through the environmental assessment process with approvals now in hand, we now are approved for a tailings facility of about 2.3 to 2.4 billion tons. So even though we have 9.8 billion tons of resources available, we've been looking at what is the best way to open up mining here to bring forward the best 2.3 to 2.4 billion tons up front to drive the project's best economics. We did a pre-feas in 2012 that was used as the basis to get our environmental approvals. We received our environmental approvals in late 2014. In 2016, we updated the pre-feas to show the impact of changing metal prices, commitments we made during the environmental assessment process in terms of adding more capital to the project for environmental reasons, and also as a result of changing exchange rates. And as you can see, using very conservative metal prices of $12.30 gold and $2.75 copper, this project produces gold at an all-in cost of about $670 an ounce. And that all-in cost includes the upfront capital of $5 billion, the sustaining capital over the 50-plus year mine life, the closure and reclamation costs, and the operating costs net of copper credits. And as you would expect, with metal prices higher than what we used at the base case back in 2016, you can see tremendous optionality to higher metal prices as well, where the all-in cost of production drops from $6.70 down to $1.60, mostly as a result of a much higher copper price than we used in 2016. What that mine plan did not yet include, however, were the higher grade discoveries we made at depth at Kerr and Iron Cap, where we added over 40 million ounces of gold and nearly 30 billion pounds of copper within areas that would be mined as block caves. We actually did an updated study in 2020 to show the impact of these higher grade zones on the project's mine plan. Comparing the two projects, there was a significant improvement in the project's economics as a result of capturing additional copper that we were not able to capture in the previous mine plan because we didn't have deep Kerr and lower Iron Cap available to us. We are now in the process of doing a third iteration of the mine plans to incorporate what we acquired from Pretium in late 2020. In 2020, we bought the Snowfield deposit, a deposit that we have been trying to purchase from various owners over the past 15 plus years. We finally got to a point where new management of Pretium saw the benefit of taking a meaningful cash payment from us, $100 million, plus retaining a royalty in exchange for this deposit. We believe that Snowfield actually represents the sheared off top of the Mitchell deposit. As a matter of fact, if you actually look at the top of Mitchell and the bottom of Snowfield, it is a perfect match. We are now in the process of updating the pre-feasibility study to incorporate Snowfield, and we think we'll see a number of benefits as a result of this. One of the issues that we have faced in our joint venture discussions is all of our mine plans here to date, including the 2016 pre-feas and the 2020 PEA, involve substantial block cave mining to capture resources and reserves in the mine plan. Very few companies in the gold space or the copper space actually have real hands-on block caving experience. With Snowfield, as a result of the low strip ratio, we're going to be able to show a project that goes at least 30 years with open pit mining only before you need to even contemplate block caving, which will allow the partner to actually recoup capital many times before investments would need to be made in block cave mining. In addition, as a result of the higher gold grades, we also will probably see a project that will capture far more gold reserves than what we have in our current mine plans. This updated study is expected to be completed by mid-2022, and we think it'll show not only a simpler mine plan in terms of mine sequencing, but also a much more robust project from an economic perspective as a result of eliminating block caving investments early in the project's life and bringing more gold to the front end of the project as a result of the higher graded Snowfield. We're not a single asset company. We have another advanced stage asset in Canada called Courageous Lake, an asset that we purchased from Newmont and Total in 2002. Project is situated in Northwest Territories, just south of the two big diamond mines, Diavik and Kati. When we bought this project, there was a little over 5 million ounces of known gold resources that was calculated by Newmont and predecessor companies. We actually increased the resource through exploration, just extending the strike length of this deposit along the Greenstone Belt, and grew the deposit to over 11 million ounces in terms of total resources. We did a pre-feas in 2012 that captured 6.5 million ounces of reserves within the resource available to us. What hurt the project in 2012 was a weak Canadian dollar relative to the US dollar, which is not good for Canadian assets, and that most of your costs are denominated in Canadian dollars, where your revenues come through in US dollars. And as you can see here, that base case back in 2012 with the Canadian dollar essentially at par with the US dollar generated pretty marginal returns for an investment of over $1 billion to build the mine. However, if you look at the same case and just change the gold price and change the exchange rate, you can see a project that improves dramatically. In addition, we've also done internal studies to look at is there a lower cost or smaller startup project here relative to the larger mine that was in the 2012 pre-feasibility study. And in fact, there is. We're now looking at what is the best path forward for Courageous Lake, bringing a partner in now, selling it, and perhaps retaining a gold stream on it, or perhaps even us getting back on it ourselves. We have a number of companies looking at this opportunity now, and hopefully over the next few months or so, we'll make a decision in terms of what's the best path forward. Where we're focusing is where our strength is, and that's in terms of exploration. As I mentioned at the front end, we now have 3 earlier stage exploration projects: Iskut, Snowstorm, and 3 ACEs. Iskut is the one that we purchased first, buying a small public company called Snip Gold. We bought this because we see tremendous similarities at Iskut to what we saw at KSM. Same age of mineralization, same types of rocks, same structural elements that led to the large porphyry deposits at KSM. And in fact, we're now focusing on a porphyry opportunity that we believe is situated under the old Johnny Mountain mine that produced about 200,000 ounces of gold from about 1 ounce per ton head grade. Last year, we started to test for this porphyry system. We did encounter, decent runs of gold and copper, not yet the heart of the system. And this year now, we are now in the process of drilling, hopefully to get into where the higher grades gold and copper might be underneath the old Johnny Mountain mine. Second acquisition we did was in Nevada, buying a large land package called Snowstorm from John Paulson. Snowstorm sits on the intersection of the 3 most prolific gold belts in Nevada: the Getchell Trend, the Northern Nevada Rift Trend, and the Carlin Trend. We see a lot of similarities at Snowstorm to what exists at Twin Creeks and Turquoise Ridge, which are 2 of the largest mines in the Nevada joint venture between Newmont and Barrick. Our first drill program 2 years ago confirmed that the structures that led to the mineralization at Turquoise Ridge and Twin Creeks run right into our project. Last year's drill program confirmed that there was actually gold in the system there. This year, we're now drilling to hopefully vector into where the high-grade zones might be, like you see at Turquoise Ridge and Twin Creeks. That drilling is underway, and we should have results on that over the next several months as well. There's no question that the best place to find a new deposit is in close proximity to an existing mine that at some point will need new reserves. If you stand on the top of our Snowstorm project and look down the valley, this is what you see: Turquoise Ridge and Twin Creeks. Third acquisition we did was in the height of COVID, buying the 3 ACEs project from Predator Gold, an asset that we have been following for a number of years. In fact, at one point, this asset generated a market cap to Golden Predator of over $200 million. We were able to buy it in 2020 for about 300,000 shares and granting them a 0.5% royalty. It's a large land package. It's over 300 square kilometers, and there are known gold showings right at the surface, over 35 kilometers of strike length. If you look at some of the historic drilling that's been done here, it's been phenomenal. In fact, more than a third of the holes drilled near surface intersected better than 5 grams per ton over meaningful widths, and more than a quarter of them intersected over 8 grams per ton. We are now doing some geophysics here. We believe that there are actually parallel structures in addition to what's known here in terms of gold mineralization. We've also applied to the Yukon government and the First Nations there for a large drill program that we would like to get underway as soon as we get the permit application approved. Whether that can be done this year or not is a function of how quick we can get approval of our permit requests. So tying it all together before we go for Q&A, why Seabridge at this point in time? Well, if you believe that the gold price is going higher or the copper price like we do, we have a 22-year track record of showing significant outperformance relative to gold, and our shares should do what they've done in the past, and it's outperform gold and gold equities if the price of gold is going higher. We're also sitting with 100% ownership of the largest undeveloped gold copper project in the world, in a world that actually needs new projects in terms of dwindling reserves by the majors and sources of new copper to satisfy future needs from green energy initiatives. We also have 3 exploration projects, which probably right now we're not getting any value in our share price for. Exploration success at any one of these could lead to immediate returns to our shareholders. We are in the process of updating the PFS for KSM to incorporate Snowfield. And we think that will show a much better project than what we've been able to show before in terms of not only economic returns, but mine sequencing and simplifying the mine plans and pushing block caving way to the future. Our expectation at KSM, as I've spoken many years about now, is to bring a partner in to develop the project with us. Our goal in a joint venture is to hang on to at least 30% of the project while minimizing our capital contribution towards the project. We identified that there's probably 7 companies on the planet, maybe 8 now with the combination of Agnico Eagle and Kirkland Lake, that would have the technical, financial, and social wherewithal to develop KSM. We think that the timing that we now see in terms of metal prices, the amount of cash flow these companies are generating, the dwindling reserves, is now time to get the deal done. We have turned down proposals in the past that have not met our expectations in terms of what we're looking for in a deal. We only get to do this once, and it's got to be with the right partner and the right terms. Nobody wants to get a deal done more than I do. I've got 90% of my family's net worth tied up in Seabridge common shares, and I am confident that the right deal with the right partner will lead to a significant unlocking of value very, very quickly. And then last but not least, if you look at our track record, I think what I'm most proud about being the creator of this company is how we've been able to manage our capital structure. Show me another company that's been able to build an asset base like this over a 20-plus year period and still have less than 100 million shares outstanding. The fact is we issue shares on a very careful basis, making sure that whatever dilution we do suffer can be offset with accretion in ounces on a per-share basis. And then finally, I think one of the reasons why it all works is the insider ownership that exists in this company. Insiders of the company, including co-founders, the board, other management teams, Albert Friedberg, is over 30%. Show me a company out there that has that type of insider ownership, as well as strong institutional support from some of the better names in the industry. And then finally, we are part of the GDXJ. This morning we actually we were actually doing quite well relative to the other gold equities, where all of the gold equities have reached a new 52-week low. Today we traded below that. And I think if you're looking for an entry point into our Seabridge, probably today represents as good as a chance as you're going to get any time over the past year. So Campbell, with that, happy to answer any questions.
Yeah. Okay. A few people noted that you, in your press release, September 20th, strengthens management team with 3 key appointments, one of them being a human resources vice president. Interesting. Can you just sort of comment on your latest staffing? And so to quote one investor, have you been adding valuable employees to help Seabridge reach its potential? So can we read into anything that you're staffing up?
I sure hope so. I mean, the fact is, if you look at, we've publicly stated that we are starting site capture at KSM in terms of building roads, building fish compensation. We'll actually put a bridge across the Belle Irving early next year. You want to take that as an indication that we're moving towards a joint venture. I think that's a reasonable expectation on that. The closer we can bring the project to a construction decision through site capture activities, the better. So you look at a guy like Ryan Hull, who came on as our VP of projects. Ryan has tremendous experience with larger projects and early stage construction, which he's now part of our team. As the team has grown over the years, we also have never had a VP of HR. We now need that role internally as, with a larger company, you need that type of capability. The third hire was Tracy. Tracy has been working as a consultant to Seabridge for a long time, both at Courageous Lake and KSM, and we're tickled to death that he's now agreed to come on full time as a VP of Engineering Studies. And also, you also have to expect that over time, some of our longer standing employees are probably looking for retirement. So we need to start to build in succession planning, and these 3 hires will help that. Just so you know, I have no plans of ever retiring. I love what I do. I'm going to stick around till to the end here, whatever that might be.
How many shares are outstanding fully diluted?
think it's just shy of, I think it's 79 million shares now, fully diluted.
What gold price will make this project come to life? So I guess what would be an extraordinary, what gold price would start to make things super extraordinary, I guess?
Well, look, I mean, it's not just the gold price, it's also the copper price. They both kind of work together. In our PFS mine plan, probably 70% of the project comes from gold, 30% from copper. When we did the PEA mine plan that captured higher grade copper, it was more like 50-50. So it's not just the gold price. And as our studies have shown, this project generates tremendous returns at not only current gold prices, but metal prices well below where they are today in terms of spot. It's not so much a function of the price, it's a function of the companies, the big companies finally getting out and doing the acquisitions that they need to do to continue to sustain themselves. I think, we're starting to see, I think that M&A start to perk up, not only with the deal we saw yesterday announced between Kirkland Lake and Agnico Eagle, but also comments from some of the larger mining companies like Mark Bristow at Barrick, who talks about that big companies need new projects. They're not finding them on their own. And I'll be speaking about that at the Grand Conference in terms of one of the bigger issues that still faces the industry going forward in terms of replacing reserves on a continuous basis. There's been no real major gold discoveries over the past 5 years, even though big companies continue to devote a lot of dollars towards exploration. The cupboard is running dry there within the big companies. And, I think, as I said, I think our timing is quite exceptional now.
All right. Total development costs for KSM again?
It's just over $5 billion spread out over 4 to 5 years of construction. Obviously, we need to do an update on that to see what the impact might be in terms of inflation. One of the great things about KSM, though, is a big cost component in projects like KSM is the cost of power, not only in operations, but also in construction. We're now working with BC Hydro to make sure that we have that cheap power available to us right at the beginning of construction, which will obviously help in terms of keeping costs relatively low to where they might escalate to if we had to use natural gas, coal, or diesel to fund power generation there. And the updated study will have a new estimate of capital. And I'm fairly confident to say that even if there is inflationary pressures, which I'm sure there will be in certain areas, that they'll be more than offset by what metal prices have done since our last study and what we'll be using in terms of base case numbers at that point in time.
Has someone moved this year to do a deal on terms that weren't acceptable to Seabridge?
I mean, I can't speak in terms of any ongoing detailed discussions. All I can say is we have the right bodies at the table now looking at this opportunity more than any time in the past, and I am confident that we will get a deal done in a reasonable period of time that will make our wait worthwhile.
Okay. Someone asked who's representing the interests of shareholders at the table and in negotiations. I would say that might be you, being the largest shareholder. But
being one of the largest shareholders, please accept the notion that when I think about the future of Seabridge, I think of it more from the perspective of a large shareholder and what the value we should be able to get in our shares relative to what I might get paid in my role. The fact is my upside in terms of the share price and shares I own is far greater than it is from any compensation they may receive from the company. At the right time, it's hard to bring shareholders into joint venture discussions. These discussions are held under very comprehensive confidentiality agreements where information can't really be shared in terms of a larger audience of people. Know that the people at the table on the Seabridge side are well aware of what our shareholder expectations are on this. I have regular dialogue with most of our largest shareholders on this list on the slide here, including Albert Friedberg. And I think I have a sense in terms of what they would be willing to accept in terms of deal structure. And we're not going to do a deal that I don't think is going to satisfy the expectations of our largest shareholders, including myself.
Do you still maintain you will not build this yourself?
Absolutely.
Or is there an option to do a smaller starter mine or anything like that?
No, there really is no smaller starter mine here. We're permitted for the larger throughput now. That's what will be built here. You need certain infrastructure to go in on the front end in terms of roads, tunnels, tying into the grid. That are as a function of there's not a smaller mine here. We will not build this on our own. I've said that for 22 years now. We will never try to build a mine on our own. We believe that we're willing to give away some of the upside in a joint venture, while at the same time minimizing what our capital risks would be to develop a mine. There's very few companies out there over the 40 years that I've been in the business that have successfully made that transition from exploration to a producing company on their own without blowing up their capital structure, without taking on too much debt, and actually leading to a lower share price over time as a result of the challenges you face as an operator. We will not build this mine. We're willing to take on early stage construction for site capture, which quite honestly makes the project more attractive to a major, in that with site capture here, that will be definitely very helpful to us in terms of getting to a production decision quicker than if they had to go in and start some of that road stuff on their own.
I'm going to pass this over to Stuart to ask some more questions, and then over to Adam.
Yeah, thanks for the update, Rudy. And I guess touching on the recent big merger yesterday with Agnico and Kirkland Lake, someone asked from the audience, can shareholders of Seabridge suffer the same, take under premium that you saw with that merger of equals?
Well, I think if you look at our shareholder structure, I doubt an at-market bid from a company will be satisfactory to our existing shareholders. I know my expectation in future share price is much higher than it is today. So I doubt that one of the nice things about having such a tight concentration of shareholders is I can basically make less than 10 calls, and I probably speak to greater than 50% of the people managing and owning shares. So a bid at today's share price will not get accepted in my view. I know I wouldn't be in favor of that, and I think our board would be on side with that. So I think it would take much higher than that if somebody wanted to come in and own the whole thing. Look, I mean, I'm not saying that the company wouldn't look at a proposal that came in. Of course we would. We have fiduciary duty to do so. But I doubt that a merger of equals or a merger without a premium component, or an acquisition proposal without a significant premium component to it, would be accepted by our shareholders. One of the great things that you can always do in a proposal to acquire the company is just say no. And I think the ability to be able to say no because of our large shareholder ownership group makes it a little easier than if the company's shares are more widely based and less insider ownership.
Yeah, understood. And then, if you could touch on, how that recent merger, can put the spotlight on developers with size like yourselves.
Well, it's exactly the point I made early on. It's that, there's very few companies out there that have the technical, financial, and social wherewithal to develop a project the scale of KSM. I would say that Agnico Eagle or Kirkland Lake on their own did not have the bandwidth to do a project the scale of KSM. They're now a much larger company as a result of that. And as a much larger company producing more ounces, they have a bigger need to replace ounces each and every year. Smaller projects won't move their needle much. They will need to start focus on larger projects, and in that they're already in Canada. We'll see where dialogue may go with them on that. But as I said earlier on, I think the world of Sean Boyd. I think he has done a great job managing the affairs of his company. In fact, if you look at his relative share price performance on that chart we put forward, their shares have done as well as the gold price, whereas most of the other gold companies have significantly underperformed.
Yeah, thanks for that. And then that kind of brings me to my last question, and is your share price chart doesn't look quite like other gold developers in the space, and has kind of held up well. If you could comment on why you think that is.
Well, I think it has to do with us being consistent with our messaging over the years, what our expectations are. In each annual report, we lay out what the specific goals and objectives are for the current year. And then in the following year's report, we actually report how we did against those objectives, where we may not have got something done, what happened. So I think we've kind of been putting in this report card every year now for the past 20 some odd years in our annual report to shareholders. I think another part of it is, we have a lot of people that have owned the stock since for 20 years now. We have a very sticky shareholder group, and that was also evidenced by the financing we did in December of last year to raise the $100 million US to pay for Snowfield from Pretium. Over 80% of that financing was taken down by existing shareholders. That's quite remarkable considering that these people already own a lot of stock and have been shareholders of the company for well more than a decade. I'm fortunate that we have a shareholder base that's been as loyal as they have been over the years, and I think that's been reflected in our relative share price performance, even in this tough time right now where all gold equities are getting beaten up pretty badly, that our share price has held up relatively well compared to the industry.
Yeah, thanks for that, and I'll pass over to Adam.
Great. Thanks, Stuart. Couple of questions, Rudy. Is Snowfields already drilled out to an M&I basis so it can be fully incorporated into a pre-feas?
Yeah, if you look at the 35 million ounces of resources at Snowfield, 26 million ounces are already in the M&I category. So a significant portion of the resources at Snowfield are already in the M&I, so they can be considered as reserves. Our limiting factor will be the 2.3, 2.4 billion tons we have in tailings capacity. So we remain to see how many of the ounces in M&I will actually convert to reserves. If we were to run a model without the constraint of the 2.3 to 2.4 billion tons of tailings we have available to us, we'd be able to capture almost all of those ounces at Snowfield into a reserve mine plan. We also did some more drilling this year, not only to confirm the model at Snowfield, but also to capture some more material for metallurgical test work. We're looking at the potential of blending Snowfield ore with Mitchell in a mine plan from open pit only. So additional metallurgical test work from fresh material from Snowfield and Mitchell is now in hand. And then finally, we're also doing some geotechnical drilling around the Snowfield deposit just to reconfirm the pit slopes that were used to constrain resources in previous models to see what is appropriate to carry as a pit slope in the new mine plan. One thing I can tell you is that the strip ratio at Snowfield is one of the lowest I've ever seen in my 40 years in the business. It's well below 1-to-1 strip ratio to capture a good portion of those M&I resources as reserves.
Did you guys also buy the valley that Pretium was considering to use for the tailings for Snowfields?
Yeah, we bought that large. It's on our. Go to our website. We bought that one big claim block that includes the valley. The fact is, Snowfields is already in the Mitchell Valley. In our PFS and our permits, we have to deal with water runoff from Snowfield anyway. So we already had operations and infrastructure in that valley, which was agreed to with Pretium early on in terms of cooperation agreements we've had in place with them now for well more than 10 years.
So the valley that they were going to use for their tailings for Snowfield, do you view that as a viable tailings option for you as well for additional capacity?
No, we don't. The fact is it's going to become far more challenging to permit new tailings facilities in any valley. One of the great things about KSM is, as we develop block caves or build big open pits, those holes in the ground become future tailings disposal areas that already are there and safe. So we already have the Taltan Nation, who we have an impact benefit agreement in place. Look, I know we have a 50-year mine there now. We want a 100-year mine there. How do we get there? And we talked to them about the need for future tailings. We don't need to solve that problem right now, but that is something that we're looking at in terms of how these open pits as developed can then become storage spots for future tailings facilities. And I think that's where this will go. Not in my lifetime, but there's enough metal there for 200 years of mine life at 190,000 tons a day of throughput. I mean, just think about that. I mean, there's not another project on the planet that has that type of potential in terms of mine life. There's no doubt in my mind that at some point in time, as this project is developed and built, that capacity will be increased, throughput will be increased as a result of all the economic resources that are available to the project even today. So, our initial design was 130,000 tons a day. In the updated pre-fees, we're actually going to go to a higher throughput than that we did in the 2020 PPA. But a lot of the big copper companies come in and say, even 195,000 tons a day is too small. How do we make this bigger? Well, I think you make it bigger by not building any, constrictions on the front end in terms of roads and tunnels, and allowing for future production increases as you open up the district.
Rudy, again, just sticking with the incorporation of snowfields, my recollection was snowfields had good gold grades, more molybdenum, but less copper. When you guys are working in the blending and whatnot, is this going to mean, you're going to definitely add the molybdenum flotation cells because you're incorporating snowfield?
Yeah, Adam, that's a great question. It's something that we look at. I think the previous couple of mine plans we did, we kind of turned off the moly circuit because economically it didn't make sense. I believe that the moly prices have gone significantly higher than the last study we've done. I heard that they're north of $20 a pound now. So I think we have to, again, look at, turning back on that moly circuit, because I think at $20 moly and what the moly grades are at Snowfield, that is a circuit we want to run because it will generate, positive returns.
Mm-hmm. And then just sticking to KSM, has there been any developments on the tunnel boring technology from the equipment manufacturers that I know you are keeping an eye on? Has there been any developments there that could possibly shorten and reduce the cost of the tunnels?
Absolutely. We were very conservative in our pre-feasibility study and all mining plans to date that, we were assuming, I think, 5 meters of advancement per day at the tunnels with traditional drill and blast mucking out. There are a number of new technologies that's being developed in Europe now that actually can speed it up quite a bit. We're in close contact with the builders of that equipment, these continuous miners that can go in. And in some cases, they're seeing advancement rates of 15 to 20 meters per day for the similar sized tunnels that we're contemplating at KSM. So if we can find a way to shorten the timeline of tunnel construction, which is one of the critical path items during the construction phase of this project, that would be hugely beneficial in terms of bringing production forward, but also reducing capital costs because if you can cut a year off of schedule, just in shutting down the construction camps alone is a savings of at least $500 million.
And when will that technology be sufficiently developed that you can incorporate it into a pre-feasibility study?
Great question. That's being looked at right now as part of this study, whether it's incorporated into this. As I said, we have close and constant contact with the builders of this equipment. This equipment is being used around the world already for a lot of the tunnel boring that's being done for road work in Europe. So we have real-line data here in terms of what this perhaps might be able to do. At the end of the day, it's going to be a function of how our partner's going to want to build these tunnels. But obviously, if we can show different ways to reduce the costs and also reduce the timeline, I know the big companies that are engaged with us on joint venture discussions are also looking at this technology as well.
Rudy, if we could just step back a moment and considering KSM from a global perspective, how would you compare KSM to some of these large early stage discoveries that are being made in Ecuador, Colombia, and Argentina? And related to that, sort of the incremental exploration dollar is now being attracted to those countries for very large projects.
Well, I think the exploration dollars that are going there is a function of how challenging it is to find new big deposits. I mean, the 3 countries you mentioned, clearly from a political risk perspective, are challenging. We saw what Ecuador has done in the past to try and get bigger pieces of projects, actually resulted in Kinross walking away from a big project that they own there. there's been very few big projects found. How you look at KSM relative to those, none of those new big projects are permitted. They have a long way to go just on the permitting side. We have permits in hand to start construction. You have the risk of, I'll call it creeping expropriation that tends to happen. The availability of water that you need, at least some of these high deserts in some of those regions, to process ore effectively, and how do you get the water there? Dealing with tailings disposals. KSM obviously logistically has challenges with the topography, but from a political risk perspective, it's about as good as it gets. From a capital efficiency, you're looking at a project here that right from day one, once this mine is up and running at today's metal prices, this project will generate over $2 billion of cash flow a year for many, many, many years. There's very few projects out there that can generate that type of cash flow of size.
Got it. And water is certain. You've got the opposite water issue at KSM.
Water's not a problem at KSM. It's
Well, it is if you can. It's what to do with all the water.
One of the nice things is, as you know, Adam, you have visited the site with me in the past. A lot of the water that's coming out of the Mitchell Valley now and flowing into the Unic River actually is contaminated because that water flow is running over an exposed porphyry. I mean, the pH of what's coming out of the Mitchell Valley naturally now is about 2. We had a town hall meeting in Ketchikan, Alaska early on in the project to introduce who we were and what our plans were going forward. This is probably more than 10 years ago. And the EPA was there and said, look, people, we understand why you're here. There's concerns about water flows and contamination that will come out of the site. Understand that what's coming out of the site naturally today is already killing your fish. A mine in here, whatever they touch, they're going to have to treat. And as a result of actually a mine going into the Mitchell Valley, the water flow will be improved because we're going to have to treat that water and discharge it essentially at neutral and remove all the heavy sediments that are now flowing down into the Unic. So, the water flow is a challenge in terms of the amount of flow we have, but it's also an opportunity. And I think that's why we got through the EPA and the Department of Natural Resources of Alaska in our environmental approvals. Even though there was no requirement to have them in the process, we brought them into the process because there is water flow that will come out of KSM eventually and still does naturally into the Unic and across the U.S. border.
Mm-hmm. Exactly. I guess stepping away from KSM, recently there's been, as part of the $3.5 trillion U.S., whatever you call it, infrastructure bill, there's a proposed royalty on U.S. Assets. And your snowstorm asset comes to mind. And I was curious, what your opinion is of that bill, and would it have an impact on the snowstorm asset going forward?
That bill will do a lot of damage to the mining space in the U.S. I think what they're talking about is an 8% royalty on any new projects, a 4% royalty on existing projects, plus some sort of a tariff or per ton fee that you have to pay as you remove material from public lands. That will hurt the industry. There's no question about that. In my 40 years, I've seen this come up a number of times in the past, and through lobbying, the industry has always been able to keep existing rules and tax levels and at bay. Whether with the change in government in the U.S. and the outlook in terms of who knows what the future may bring and what the Congress may decide to impose. One of the nice things about the Snowstorm, however, is if we do have a discovery there, I doubt that it will be a standalone operation. I believe it probably will be integrated somehow into the complex at Twin Creeks and Turquoise Ridge that the Barrick is now running in the Nevada joint venture. So hopefully, if there is an increase in royalties, it can be factored into as an existing mine, just new reserves that's already going through existing infrastructure, which would have a less of an impact if you did a standalone operation at Snowstorm. But there's no question that that type of royalty structure will be, I'll use the word devastating to the industry. in terms of taking away 8% of margin immediately that companies need to generate the types of returns to build mines.
It'll take away more than 8% of margin because that's an NSR revenue, or an NSR royalty.
Agreed.
So the snowstorm property is on BLM land?
Yeah, some of it's on BLM land, some of it's on private land. So it's a function of where we make the discovery. If we make the discovery there, what land it's on. But we have a combination of private land and BLM land there.
Gotcha. Do you have any feel for how much of Nevada's gold is current operations are on federal versus private land?
I don't. That would be a good question to answer, though, Adam.
Yeah.
I'm sure that's being researched now by some groups as a result of what Congress is proposing.
I assumed, that most of the big mines in Nevada, pre-existed or existed before and were operating before 1992, which I think is when the federal government stopped giving patents. And so I had assumed that most of those mines were on patented. The existing mines now run by Newmont and Barrick were on patented ground, but I don't know that for a fact.
Yeah, I can't answer that question. I do not know.
Mm-hmm. And then I know we're getting close to the top of the hour, but I just wanted to get your opinion, Rudy, regarding this merger announced yesterday. I can't help feel like we're back to where we were 10 to 15 years ago when the large guys were just buying each other instead of, just to get bigger. Instead of buying development assets. And, the gold industry has outsourced all of their exploration and project development to the junior miners. And then, the flip side of that is, well, they're supposed to buy the junior miners, to develop their projects, so they can apply their, their superior technical and financial capabilities and a much lower cost of capital versus a junior in order to bring those into production. And by buying each other, that doesn't do that. And ultimately, it just, results in fewer gold, less gold being produced. I wanted to get your opinion of that.
Yeah, as I mentioned, Adam, I'm going to be speaking quite a bit about the gold industry at the Jim Grant Conference coming up October 19th in New York City, in terms of, why have gold mining stocks not kept pace with the price of gold, at least with the majors, and also look at the challenges that the industry faces going forward as a result of, dwindling reserves without replacing reserves. And now you're right, we're starting to see that Pac-Man activity again, but the difference today versus then, there's a lot less majors around today than there were back then. And there's not many more chess pieces on the board where you actually can do mergers to create larger companies, to be honest. The biggest issue that the big companies face is replacing reserves. They're not doing that. If they want to maintain their production beyond the 10 years or so they have left in terms of existing reserves, they're going to need to start focusing on new opportunities. And that's where a project like KSM really, really does stand out, not only just on the gold side, but also on the copper side. So I'm quite excited about where we are now. I think M&A is now just starting to take a lift off, and it'll only intensify as metal prices continue to go higher.
Very good. Thanks, Rudy. Let me pass it back to Campbell to see if there's any additional questions or if we need to wrap up.
I'll just run through them quickly, and then we definitely need to wrap up. As you add talented staff, how long do you project you can go without needing to raise funds should there be no transaction in the next 12 months?
Well, look, we raise funds every year. I mean, look at our share count. When I took over the shell in October of 1999, I think there were 17 million shares outstanding. Today, there's 77 million shares outstanding. So we've increased the share count by 60 million, but we've increased the ounce count by 179 million ounces. So 159 million ounces. So, we will continue to raise dollars to support our needs, provided we can convince ourselves that over time that dilution will be more than offset by accretion in ounces. We have an ATM in place right now that we use to basically replenish our treasury. on a fairly regular basis. That's reported in our quarterly reports. So yeah, we need capital. I mean, we've also been fortunate that we've been able to sell non-core assets over time to generate proceeds. We recently did a deal with the Sprott Royalty Company, where we sold a retained capped stream that we had on the old Red Mountain mine that's now being put into production by Ascot Mining. We sold that for $22 million Canadian on something that people didn't even recognize we still owned. In fact, if you look at our track record over the past 20 years, we've generated over $75 million in cash proceeds from selling non-core assets and still have royalty interests or net profits interests in projects that, in our view, will eventually get built. So, yeah, we're going to raise money. We're going to issue shares for some of it, but rest assured that we follow very closely to make sure that dilution is offset by value, which up to this point and will continue to be the point going forward in terms of accretion in ounces.
Is it possible you could have two JV partners, a gold company and a copper company?
Yeah, we've actually had discussions with syndicates, companies that have worked together in terms of looking at co-developing KSM with us. It's included two mining companies in the past. It's included a mining company along with a financial player that wants the copper concentrate. I wouldn't be surprised if at the end of the day, the deal that we announced on KSM will be a syndicate, with perhaps even two mining companies working together. There's no question that there's enough metal there to go around with three different companies with the resources and the reserves we have there.
Please comment on backfill. This is at Snowfield. Please comment on backfill, thus underground presenting an enhancement opportunity to open pit mining requiring external space for waste and tailings.
Yeah, so, one of the great things as we went through the environmental assessment process at KSM, we have permitted the largest footprint for waste rock storage because back then when we were looking at the pits at Mitchell, it was the biggest pit possible there. Follow-up mine plans actually went to block cave mining at the deeper depths to reduce the amount of waste rock that has to be mined. But I think what we're going to be putting forward in the new mine plan to incorporate snowfields will actually be a smaller footprint than we've had in previous mine plans as a result of the very low strip ratio of snowfield. So we have more than enough space to deal with waste rock, even at the biggest pits possible. I think we're actually permitted for over 3 billion tons of waste rock there. One of our more previous mine plans actually reduced that by quite a bit, cut it more than half. In terms of waste rock, we're well covered there in terms of size. Tailings, as I mentioned, will have to be, beyond the next 30 to 40 years of production. Additional tailings spots will have to be found if you want to continue operations beyond the 2.3 billion tons of tailings we now have permitted. And as I mentioned, the best place to put tailings in the future is holes that you create in the ground, either through block caves or open pit mines. So that's probably the future in terms of additional tailings capacity beyond what we have permitted now.
Very good. I want to thank everyone for tuning in. Please share your feedback here or when you check out or in the follow-up email in a few hours. Again, this is available on demand at amvestcapital.com/replays, and you'll get it in an email. The replay link is the same as the registration and join this event link. So if you share it on social media or whatever right now, eventually the link will be available about an hour and a half after we wrap up. With that, I'm going to turn it back to you, Rudy, to give us a quick close.
Thank you, everybody, for taking the time to listen to the presentation and ask your questions. As most of you know that are familiar with the company, I am always available to answer questions from shareholders. So don't hesitate to reach out to me. Best way to do that is with an email. My email address is Rudy, R-U-D-I, @seabridgegold.com. If you do send me an email with a question, please include your phone number so I can give you a call back with the answer. So thanks again, and look forward to our next encounter.
Thank you very much. Good day.
Thank you.
Thank you.